What's up, everybody? Welcome back to Wealth Not Wait. I am your host, as always, Joseph Coizza. And where have you guys been? I've been asking for you for a couple months, but I haven't seen you guys around. Well, at least you're back now. Let's see what you guys missed.
Last weekend, a lower yield, bullish or bearish? Yields are lower today. Talk to me.
Really moving into a bear market. How long do you think it will last?
All feeling it at the grocery store, at the gas station.
Yeah, I almost cried when I got groceries yesterday. Whew. The Fed is considering raising interest rates again, and that does have some investors worried.
Oh God. So in actuality, things aren't really that bad. Just of it is that we are in a bear market as opposed to a bull market when everything's going really good and people are buying a lot, is now where the market has dropped 20% or more from its recent highs. We've seen something like this around the time of COVID. We've seen this many times throughout history. And the good news is things are not as bad as it may seem. You'll get a bunch of emails from your financial advisors. You'll get a bunch of emails from your news. You'll be getting a whole bunch of news updates and everything being said about the bear market. But essentially, it's just that we are in a small dip. It's a part of a healthy rebound. It's a part of a healthy financial system. Things push and they pull. They push and they pull. Life is good sometimes and life is not so good sometimes. Things go in ebbs and flows. This is a part of the negative, the downturn. This doesn't mean that everything's going to crash. It doesn't mean that we're going to go into a recession. It doesn't mean that all these wild, crazy things are going to happen. Is there a possibility of a recession in the future? Absolutely, that could happen. Some market experts say that there are. A lot of other people saying that there isn't. If it went to a recession, obviously this would be a worse turn of events, but not the end of the world. This is something now that can actually be very good for you and beneficial if you play it smart and play it right. The essential gist of it is that your stock price has gone down for the S&P about 20%. On average for a bear market, it's about 29.8% on average, given the average bear markets. And it lasts about 11 months. Some people said that the bear market went since January. Some people now said it's official. But the gist of it is it's about 11-month period. Could it be shorter? Could it be longer? It could be years, probably won't be. It's a very unlikely situation, but there's no guaranteed finite amount, but the average is about 11 months. So for the next 11 months, things are going to be kind of recovering. This is part of a recovery cycle, especially now because we see supply chain issues. We see people going back to work. Some people aren't fully going back to work. You see vaccination. You see things opening up. A whole bunch of stuff's going on that the economy now needs to rebound. You see gas prices are going up. There's a lot going on financially with the economy and with the stock market, with everything in general that is now causing this bear market. A bear market is where others are fearful. So what does Warren Buffett says? When others are fearful, you be brave. Exactly. When others are very brave and boisterous and out there flaunting everything they got, that's when you start to pull back. Now is the time to buy in more into the investments you're already setting up and maintaining your financial strength. The idea is that you know your investments are good. Oh, I would hope at least your investments are good. You know that investing into the stock market, like an S&P 500 index or something, is good long-term, something over 10 years, ideally around 30 years if you're saving up for retirement. And the goal is to just increase that. This can be a big financial boost. As Tony Robbins says from a lot of his market research, from a lot of other economists, as they say, most of the money is made in just a few days on the stock market. You have to have those set days over the course of 30 years. You're gonna have a few really good days that if you're investing in the stock market, just your average, not a bunch, you're not going in on those days, but just that you've had money in play around those few days. That's where most of the wealth is built. This can be something that's very good. If you have some spare money that you've been holding on to that you want to invest, that's a good thing to do. If you know that your financial investments are sound, if it's an S&P 500 index or your stocks or your bonds or whatever you have for your financials are set up strong, even things like Bitcoin right now are dropping. Everything's kind of like going backwards. Because then hopefully it will rebound. I don't know about Bitcoin, I don't know about all that stuff, but I know that at least for stocks and S&P 500 in the market, it will rebound. So the idea is that you continue putting in the same amount and that you will see heavier returns. Or you put in a little more, if you could afford it, and of course set it up with your budget, then you will see significant returns. At least more returns than you would see normally. The idea is to keep investing into your already good investments. Make sure you take stock of your financial health and you're trying to build and grow. This will now be an added boost once again the bear market is over, likely shoving us into an eventual bull market. Things have been very good for a long time, and other than the dot-com bubble and the 2008 financial crisis and COVID, these major, massive economic and global impacting scales of all this stuff crashing and coming down, other than those crazy events happening, the economy has been generally good. We're now rebounding from COVID and all that, economically speaking. And from that, now things are gonna go into being a lot better. So that's why we have to take that rest. We got over everything. Now we're trying to build back. We're at our low point, maybe not the lowest point yet. It may continue for a little bit. Again, 29.8% on average. It could be a lot worse. It could be a lot better. Obviously right now it's worse than 20%, but eventually it will get better. See it, like the stocks you love are just on sale. So I hope you guys liked that video. It's wonderful to have everybody back and be talking again. We're gonna be doing some more. I'm gonna try and get some stuff off the ground. Kind of took a little break for a little while, figured out a lot, set myself up for more advancement and good things happening hopefully soon. I don't have anything set as far as a schedule, but every Friday I would like to get another video out and talk to you guys, tell you guys about your financial and your physical health, and just hopefully and generally improve your lives. So if you guys like this video, make sure you like, comment, and subscribe, and I'll see you all next time. Peace.